All right, everyone. If you can hear me, um, please just post on the comment section. I can hear. Yeah, if you can hear me, just post on the comment section. I can hear. I can hear. I can hear. I want to see fire, 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 fire emoji everywhere. Fire emoji because tonight is going to be mad like crazy. But all right, let's go there. Let's go there. Yo, guys. So welcome to today's webinar. My name is Joshua. uh I want to see everywhere light up, man. You guys should light up this place, please. Well, we'll soon introduce David Alabada, so let's get the numbers going up. We have 18 people right now on the stream, so we'll soon give, let's just say 5 minutes time over that. So right, so just before we get started, please just tell me where you're watching us from, which part of the country you're watching us from. We'd like to know where you're watching us from. Please just share with me where you're watching us from. Please, when you are saying where you're watching us from, add fire emoji to it. 4 fire emoji. I want to see the fire burning in the comment section. Add 4 fire emoji. Right? So we're live now. We have 21 guys already here. So we're live, we're live, we're live, we're live. Guys, come on, come on, come on, come on, come on, come on. Okay, we have 23 people right now on the stream. Wow, that's good. That's good. All right, guys. Yeah, I can see the the fire. Yeah, from Nigeria, Benin. Oh, Lekki, Ugeli, Delta States. Mr. Michael, okay, from Abuja. We have med relaxation from Ugeli, Delta State. Wow, I'm actually from Delta. Okay. Wow. Mr. Wale Tunji from Kubwa. Kubwa is in Abuja. Yes, I love the fact that you are using fire. Please use fire. If you are not using fire, I will not put your comment again on our screen. Please put on the fire. Put the fire emoji. We want to see the fire emoji. Wow, great, 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 great. Great, 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 great. Edward from Lekki. Wow, wow, wow. I guess you guys are enjoying. Uh, Not really. I see. Sorry, beg your pardon. Right, Lekki was all over the news so far. So because of the massacre out there. Well done, Edward. Well done. All right, well done. Uh, yeah, we have Godwin from Benin. Godwin from Benin. That's awesome, awesome. Godwin from Benin. Welcome. So please keep on telling us where you're from. 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 Wow. But our cuts. Yeah, I think you guys are really interested a lot in forex trading in Port Harcourt. Maureen, you guys are really interested in forex trading in Port Harcourt because a lot of people, I noticed, especially in Nigeria, when it comes to forex trading, a lot of people just comes from Port Harcourt. Like, wow, I think Suavally need to be in Port Harcourt, like physically. Wow, you see another Port Harcourt. There's Port Harcourt everywhere. Oh, maybe Benin. Benin. Wow, Port Harcourt. Now we have Benin. Benin. Wow, 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 wow. Wow, 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 wow. Okay, Mr. Ola from Ilorin. Welcome, sir. Welcome, sir. So we'll soon kick off. I want the live stream to, so other people, you want to give opportunity for people to catch up. So we don't intend to share the broadcast after now, but we want you guys to be here live so that the training will be hands-on. As you guys ask your question, Mr. David is going to answer all your questions. So we want you guys to be live here. So keep on telling me where you're from. I want to know where you're from. Oh, Natasha from Kenya. Wow. Okay, great. Awesome. Welcome, Natasha. Welcome. Oluwa Shegun from Lagos. Welcome, Shegun. Welcome, sir. Okay. Ovie from Delta. Welcome, Mr. Ovie. Welcome. Okay. Awesome. Welcome, guys. So, yeah. So today we're actually going to learn a lot. There's quite a lot on ground what we intend to share for the next 3 days. For the next 3 days, there's quite a lot we intend to share. For the next 3 days, there's quite a lot. There's like a lot to share. Yeah, like another Port Harcourt, man. Port Harcourt guys, you guys are you've taken over this place. So Port Harcourt everywhere. Port Harcourt everywhere. Okay, there's a Lorry. Oh, Oyo. Yeah, that's Oyo. Okay, I can see Mr. David is already on the stream preparing himself. Man, if this man come out, get yourself ready. Get your take this time I'm using to talk now to get yourself like a pen. If you need water, you can get water. Like I have water here already for myself. If maybe prefer soft drink, get it. Just get somewhere quiet and because today is going to be very. I promise you, like this class is nothing less than 1 hour 30 minutes, so you got to be ready. This is just for today's session, so we have a lot. We're not just coming here to talk bluff. We're coming here to show you the real deal, right? So we have 25 people already on the meeting. Okay. Right. Awesome. Great. So I'm about to bring Mr. David in, right? Mr. David Alagbada is in the building already. Yeah. So I want you to take every word that comes out of his mouth very seriously. He's someone that I met earlier on when I started my journey as a trader. So when I'm saying Mr. David is the real deal, I know what I'm talking about because I met him as a young trader. He was part of the people that gave me the earlier foundation I have. So and for me right now, it's been an awesome journey. Being now the head of operations at Suavally, but coming from where I'm coming from, if I had not gotten the foundations I probably wouldn't be where I am today. So take Mr. David very seriously. Some of you, this will be the launching pad to a new career. Some of you, this will be the launching pad to something amazing. Some of you might say, okay, maybe this is not for you. Of course, it's not for everybody, but this is something that can change your life. You have to say, okay, if this is not for me, maybe you can consider other options that surround this industry that can help you, especially now that you know the conventional investment space globally, not just in Nigeria. In fact, most part of the world, especially in Europe, right now, uh, interest rates are pretty much negative, meaning you pay the government money for you to borrow them money. So that's crazy. Now in Nigeria, you get like 3%, 4% per annum. That's mad. So you don't want that. You want something that can help you earn returns that are far better than the average return you can get out there. And this is by taking risk in the financial market, not just taking risk, taking proper risk. And this is exactly what we intend to share with you in this program, right? So Mr. David is already with us. We have 27 people already. I think we're going down, but I want this number to go up more so that I don't want people to miss this. I don't want people to miss this, right? So let me bring in Mr. David on now. So let's welcome Mr. David, guys. So I want to see the fire emoji, fire emoji everywhere, fire emoji. Let's welcome Mr. David. Let's welcome Mr. David. Put the fire emoji everywhere. Put the fire emoji. Put the fire emoji. Welcome Mr. David. This man is going to change your life. Listen to him. Is what I'm telling you. Listen to him. All right, listen to him. Welcome, Mr. David. Welcome, Mr. David, guys. Welcome, Mr. David. Right, welcome, Mr. David. All right, sir. It's set. It's set to dish a lot to you guys today. Right.
All right, guys.
So,
a very
yeah,
good evening to
welcome,
everyone.
sir.
Thank you, Joshua. Very, very excited. A very good evening to everyone. Um, the light here is a little bit, can you guys see me properly though?
Yeah,
I have to
sure. I
get
can see you.
a bit of an extra illumination here. How are you guys doing this evening? I trust you guys are doing great. I am super, super excited to be facilitating this. I am particularly excited because these are the times really for people to explore opportunities to
Yeah,
maximize
exactly.
their income.
Exactly,
I
sir.
mean, just as Joshua was saying in the intro, and by the way, thank you so much, Joshua. I mean, I felt really, really flattered by by your intro. But really, these are the times where it does make sense for us to explore options. Because just as you mentioned, yield is really at unprecedented low levels. I mean, for people who've been playing the traditional assets, bonds, treasury bills and the likes, I'm sure you can totally relate to what I'm saying, right? What we're sharing right
Exactly.
now. It's a very uninteresting environment for traditional investments. But what does that mean? Well, that means that it becomes very important to be creative about looking for other vehicles that can help us maximize. So I'm trying to get what are our numbers at the moment? Should
We're about
be
33 now. 33 now.
okay.
33.
Exciting. We're 33 now. Okay.
Yeah.
All right. So guys, I'm super super excited to be facilitating this. I actually set this up because quite a number of my friends, my people who know what it is that I do, really, really requested for a session such as this. So I decided, why not do something like this? Just get a 3-day introduction for people who are looking to explore that space, and that's why we're here. So I guarantee you that if you, whether or not you've played in the financial markets before, whether you've done something in and around treasury bills, uh, corporate bonds, bonds of any kind, on and on like that, you would find very interesting the information that we're going to share. Like Joshua said, whether or not you eventually decide to be a full-time trader, or a part-time trader, whether or not you decide that you actually want to play in this space actively, you would find very useful information that will be able to help you, that will really be able to help you navigate yourself going forward. But first, before I begin, I want to know how many people here, how many of you who are on this call right now
Yeah.
can are actually I've done anything in and around the forex space, particularly if you've done anything in and around the
Yeah, you
forex
can
space.
put it in the comment section. If you've done anything about Forex before, just put it in the
Yeah.
comment section.
So if you've done anything, so Joshua, you can help us with putting up those comments. I'll be interested in
Yeah, yeah,
hearing
yeah, sure. I'll do that as
what
I
those
get them.
feedback would be. If you know that you've traded before, or you've attended past events in trading, maybe you just sort of got involved, didn't quite stabilize with the business. I'd like to see your comments. I'd like to hear what uh, what your experience would be, and I'm hoping that sort of gets us on the way as we look to exploring all of what we've got this evening. Do you have any comments in yet? Any comments
Uh,
here?
no, I haven't seen any yet.
Okay. So if you've not played, if you're absolutely new, you can also put a comment there.
Yeah,
Never
if you're
played.
absolutely, you just place total newbie, or you
Totally,
just
yeah.
give us a comment that you're totally new to this. But if you've traded before, please tell us you've traded before. Oh, I get the comments now. I think this one
Okay.
now.
So I'm guessing. Okay,
If
I've
I,
attended
I
the first
attended
webinar.
Forex webinar and
Right.
I
So
wish
this
to
is
be
Malo
profitable.
Ifine. Okay. Ifine, you've attended a Forex webinar before, but now you wish to be profitable. You wish to be a profitable trader. This is actually the experience of quite a number of people, and again, there's going to be a section here where I particularly address how it is that you can navigate yourself if you've gone to, if you've attained some level of knowledge in the forex space. So this will be useful for you, whether or not you've ever traded before, or you're absolutely new, irrespective of what point you're in. So if I'm sure that we'll be able to give you value as we go along the way. And any other comments?
Yeah, sure. There are a lot of them. The stuff is lighting up now.
All right, man. Just put up those comments in there.
Yeah.
Let's hear the feedback. Let
Uh,
us let us get to know. Olabode Cornelius, I'm yet to start live trading, but you're done with the demo. So it would
uh,
appear to me like if you're done with the demo, the next thing to do is to start live trading. Correct? That's what
yeah,
it would appear to me, right? Okay, but you say you're
yeah.
yet
Then
to.
Maureen said total newbie. So this
Maureen,
is also
I
for
actually
you.
do, I actually do know Maureen. So
Oh,
Maureen, yeah, I do know Maureen. So Maureen, by now I expect that you should have started doing something forex. It's been over a year now. I think that your forex interest started. Any other comments?
sure, sure,
Any
sure.
other
There are
comments?
a lot of them.
Any other
Uh,
comments?
OVA said it's totally new.
Okay, totally new.
Then
Okay,
the Kabiru totally new.
totally
Uh,
new. Totally new.
no,
I mean,
Amina totally
totally new.
new.
You.
Uh, Someone said it trades synthetic indices. Wow, this guy is trading already.
Oh, okay. So I mean, if you trade synthetic indices, then it has to mean that you're already trading. Kelvin,
Yeah,
tell us a little bit about your experience in trading. I'd like to hear that. What is your experience in trading, Kelvin?
yeah.
Mr. Edward,
Edward.
I traded before but got interested and attended an intro session. That was all. Okay. So
Okay.
we're going to be sharing a little bit more as we sort of go along the way. Be
Yeah,
able to give everybody value. Okay. Any other comments? But I'd like
yeah.
to hear
There are a lot of comments, like everywhere. There's comments like that.
Sherlock Holmes. I didn't know Sherlock Holmes was in on the call. All right, you just started using a demo account, 1 week old in the market, yet to go live on a real account. Okay, wonderful. All right,
Wow.
so any other comments? I want to see
Yeah,
your comments, Dean. I want to experience your reality. Everyone in on this call on the other side, I really want to know what it is your reality is. Wherever it is that still learning, but Balola Gbenga still learning and trading on the demo. Okay, wonderful. So we have quite a few people here who have attended some kind of a forex event before, apparently. All right. Any more comments?
yeah. Totally new. Someone said he lost my man. This is huge.
Jessica, start to hear your story. Start to hear your story. You
Wow.
traded, you lost your money. Okay. Unfortunately, this is one of the things that from time to time you sort of come across. I come across it as in my journey, training people, helping traders, on and on like that. Again, we're gonna address how to ensure that you can set up profitable, obtain profitable trading outcomes, whether that's actively trading yourself or that's investing. We're going to talk a little bit more as well on. All right. So what are our numbers at the moment?
Yeah, Mr. Kelvin just posted something, and I find that interesting. I have this idea today, actually. Mr. Kelvin, keep in touch. Sure,
Okay.
we'll get that running.
All right, Kelvin. We actually do have something like that on the works at Suavally Markets. So for advanced traders, I publish every weekend now, a weekly
Yeah,
market.
that's part of it.
If you're within our community, that is, if you're subscribed to Suavely Markets email list, you'll get that absolutely free. But you have to be subscribed to our email community. You can use that, or you can engage with me and my email. You can find my email, or send it to info@suavelymarkets.com. You'll be able to engage with us. Share your thoughts, and about the forum. We definitely are going to get something like that soon, because it's always pleasurable to engage with other people who play actively within the space. All right,
Yeah.
so we're looking forward to that. If you could send us an email at info@suavelymarkets.com. Joshua, please put that email address. Mr. Kelvin, please send that email so we can walk around how we can engage better, and all right. So okay, so I think that to a large degree, if I were to do a little bit of a census of the feedback, that I think quite a number of people here are new. Obviously, we do have people who have traded before, but I would say that in terms of the requirement, it would appear that a lot of us are new. It would be useful to understand what the basics of trading would be, and be able to properly position to optimize this opportunity. Okay, Windal says trade forex and binary. Now, that's exciting. That's exciting. So you do have some level of information
Yeah.
about. So what we're going to do, this is how this session is going to run. Okay, I'm going to share very briefly about myself, and I'm going to share about the company Suavely Markets and Suavely Capital. These are somewhat twin companies, playing within this space. Then I'm going to go right to share some keys that you will be able to find useful. I want you, when you're done with this session, to take things home. I want you to take, even if it's one thing, I want you to be able to take something home. Whether you're new or you're experienced, I want you to be able to take something home from this session. So for totally newbies, I'm going to try to see if I can, in a very explanatory, sort of graphical way, explain what trading is, and get you to understand. Let's break some of the myths. I see a lot of myths in and around trading. Sadly, because of different interests, quite a number of interests. I mean, right now, I'm sure that you all know that the market is populated with all sorts of Ponzi-like schemes that purport to be in and around trading. I hear some of those things. If you're a trader, it shouldn't take you long to understand the differences between these things. But in summary, what I would want us to do would be to be better informed, whether you're a newbie. If you've never traded before, when you leave this session, you should be better informed as to what actually goes on in the financial markets, specifically in the forex market, and how you can begin to play in this space. For experienced traders, I've been training actively, mentoring traders for upwards of 6 years now. And in that space of time, I realized that time in and of itself, time spent in front of the market, does not necessarily equal success. Okay, so you have to have the right pathway to learning in order to ensure that you be one of those successful people. Okay, so my experience as an example is that when I started out, a couple of things that I was doing, would ensure that I wouldn't be successful when I started out. Until I began to do those things that you really need to do, any successful trader would need to do. Until I started to practice those things on a trade per trade basis, on a day-to-day basis, that was when I began to see an accumulation of equity, I started seeing that, my trades were becoming better, my outcomes, okay, not just on one individual trade, but over the length of a number of trades were beginning to get better. And that's what I want to share with you. So my point in summary is, even if you've got experience here, length of time in and of itself does not equate success. So I will be sharing keys that are guaranteed. They are universal truths about successful traders all around the world. They are universal truths that cannot be broken, kind of like laws that cannot be broken. So without wasting a lot of our time, let's just get started. Okay, so this training, this session is being made available by Suavally Markets. Now, I'll share a little bit about Suavally Markets and the Suavally vision, essentially, why we started it, what we're looking to do. And of course, I mean, I want to believe that we will have people who will be able to share some of the vision that we have in terms of being able to help people essentially obtain freedom. So we call ourselves your partner to financial freedom, because of course we recognize that at the core of everyone's pursuit at the end of the day, anyone who comes to the financial markets, at the core is to be able to live on your own terms, is to be able to control your time. These are some of the reasons why people trade. So this is the early trading course. It's like I said, I mean, it will be of most value to people who have not traded before. However, I did ensure, especially in tonight's session, that knowing that we will have some people who have traded in the past, I did ensure to put in keys and concepts that I have found that will be useful for any trader. But before I do that, my name is David Alagbada. I'm your faculty. I'm just going to share with you a little bit about my experience. I'm the founder of and chief mentor at Suavally Markets. I will share with you very shortly the full spread of what Suavally Market does, but this is just going to be a quick rundown of what it is that is my profile. I've got an MBA from the University of Roehampton in London. I've got over 8 years now discretionary trading experience. What is discretionary trading experience? That essentially is your trading as a result of strategies that you essentially entering into trades manually. Okay, I've got 5+ years of system and quant trading experience. What is quant trading experience? Essentially, you're using tools, you're using algorithms, you're using quantitative tools to essentially get into trades and to optimize trades. I've been a market analyst at A to Z FOREX. You can check them out. Great website, great resource. I've also been past head of partnerships for Sub-Saharan Africa and FXTM. If you're in and around the Forex markets in Nigeria, you probably would recognize the brand. It's one of the more notable brands. And here in Abuja and in northern Nigeria, I was also a training mentor over the past almost 6 years. Thereabout almost 6 years now. Training. I was also head of FOREX Educational Center. I was an account manager at INFX. Now this is probably what excites me the most, that I have been able to impact over 5,000 traders. I've also been privileged to have international trading events across multiple countries, across different countries. Super exciting about that. And it would interest you to know, I mean, especially now, I have found that we find lots of engineers within the financial markets. I mean, it's amazing. I don't know if there's anybody who's currently in here who's an engineer who started out with like an engineering background. So that's a little bit about me. Okay, so these are some of the past Forex events that we've had. Events scattered across Kenya, Ghana, different parts, Tanzania, Cote d'Ivoire. I particularly am excited that we've been able to share the opportunity, the success paths to traders in different parts, especially different parts of Africa. So a lot of the events that we used to do, a lot of the events that I used to facilitate were physical events where you sort of have everybody. But right now, one of the interesting things about Suavally Markets is that we are looking for a way where we go boundless. We're not limited by physical location. And as you would attest, I mean, I could see that different people from different parts were reaching out The vision is to be able to have forex education, forex resources, forex tools come to you right from the comfort of your home, and that's what we're going to be doing. So, a very brief intro to Suavely Markets. So, Suavely Market provides professional trading education and mentorship. That's the first thing, key thing. So, my personal vision is to have everybody trade. Now, again, a lot of people are going to say, David, but shouldn't trading just be for people who want to do it? Shouldn't trading just be for people who have a thirst for risk? My answer to that will be trading rarely can be for everyone, because everyone has some measure of a thirst for risk. There's absolutely nobody who has absolutely no measure of risk. Anybody who's like that will not get up in the morning in the first place. So, the challenge with a lot of people traditionally has been, do they understand, can they handle the risk? Lacking the ability to be able to handle the risk has primarily been the challenge for a lot of people, who approach the financial market. So my vision is everybody can trade. It doesn't really matter. I will share. I've trained people who have some of the craziest shadows, doctors, people who work on rigs, where essentially you've got periods where you kind of be whatever point that you can, whatever your realities are, there's always a trading strategy that will suit that. So yeah, that's our vision. A little bit ambitious, yes, we recognize that, but still, that's our vision. Nothing Suavely does is provision of ongoing resources for traders, signals, tools, indicators. As you go along the line, you get to understand what some of these things are. But traders understand what these things are. We're curating a library at Suavely Market that allows for traders to be able to have a boundless amount of tools that improve their trading performance. We also do custom trading publications and research. Like I mentioned, every weekend you can get, if you're within Suavely Markets community, that is, if you're subscribed to Suavely Markets email list, you will be able to have access to my week on week research that essentially looks at the opportunities within the forex markets, but not just the forex markets, but also looking at other alternative assets, certain shares as an example, certain cryptos as an example. So we basically do that. We also facilitate community support, which is what goes to what the other commenter, the person who commented earlier on, I've forgotten his name now, what he said about building a place where advanced traders can sort of network. So this is partly what we make as a mission, to facilitate a community support for traders. So, trading can be a very lonely activity, essentially, because, you're there with your laptop or you're there with your phone, and you don't know, it's very possible for you to not to know anybody around you, around where you live, not your family member or anything, who does exactly what you do. So one of the things that we're doing at Suavely Markets is to be able to facilitate community support for traders. So you're not alone. You have a community that you can share ideas, we can work together, ultimately to make you better at the journey. Now, Suavely Capital offers capital management services. In addition, we have custom portfolios suited to each client's risk reward appetite. Now, about those, the full details of those, I'm not going to be sharing it because that's not the objective of this session. Anyone who's interested, you can reach us at info@suavelymarkets.com or info@suavelycapital.com, and we will provide you a lot more information about that. We also offer alternative asset diversification for traditional investors. What does that mean? We recognize that the forex space, this essentially the sports CFD space is not traditional. A lot of people look at it from afar. So what we try to do is to be able to make that information that's useful to people, to be able to understand what counts as a proper investment type. As I've mentioned, we have all sorts of individuals who sort of peddle themselves as managers within the space. It's critical for you to know so that ultimately your capital is protected. So we do a lot of this at a sister company at Suavally Capital. But that's just all of this is just to provide you a level of information about what it is that we do here. Now, having understood that, I want to believe that nobody is here on this call without a sense of understanding that there's potential within the market. You wouldn't be here. I mean, I'm certain that on such a nice Saturday evening like this, there's a lot of things that you could be doing. But you're here because you understand that there's potential. But again, just to nudge you in the right direction and help you crystallize that idea, I'm going to share with you a couple of reasons why I think that this is the right time to trade. Now, trading allows you to keep your assets in cash. Now, a lot of people might not understand why this is important. So recently I was reading something about Bill Gates and Jeff Bezos. So a lot of you might know that Jeff Bezos now is significantly, in terms of net worth, significantly richer than Bill Gates, almost like 70-80 billion dollars thereabout, because he's already in and around the $200 billion threshold, by far the richest man in the world. It was very interesting for me to read that even though Jeff Bezos was richer in terms of net worth, he wasn't able, if he wanted to purchase something of $50 billion as an example, say he wanted to purchase a company, he would find it difficult to come up with that cash, not as fast as a Bill Gates will come up with it. You know why? Because the bulk of his net worth, I'm told that he's got about 15% of his total net worth in Amazon. Now Bill Gates, I'm told, has less than 10% of his total net worth in Microsoft. Now that's very interesting. The differences exist because one person understood that concentration of your portfolio, especially in things like stocks and might make it, the stock of your company, might make it difficult for you to liquidate quickly if you wanted cash. Now, that report I read was basically explaining that if Jeff Bezos wanted to raise 100 billion, it would be really difficult for him. Reason is, even he would need to sell off a whole lot of his shares, and he's not going to be able to have people who will be willing to take off those shares immediately. I don't know if you're following what I'm saying. However, Bill Gates, even though he founded Microsoft, he understood this principle. He understood that cash ultimately is king in terms of the investment space. Now, people who do a lot of real estate will understand what I'm saying. You could have put in over 50, 60, 70 million, and then find that if you wanted to do a project, now of course that goes into your net worth, and I have absolutely no problems. I think real estate is great. I'm a big fan of real estate, but in terms of understanding how you structure your finances, how you structure your portfolio, you must not be so tied in to non-cash assets that you don't have cash assets to liquidate when you actually require to do other kinds of investment. Now, that story really hit me hard. It was interesting. So Jeff Bezos would not be able to sell off because, number one, if he sells off too fast, a lot of people are going to say, hey, why is the owner of a company selling off? It must mean that there's something bad. That's going to crash the stock prices. That's going to reduce his net worth. He can't sell off too fast. The other problem is not a lot of people are going to be willing to buy that volume. So he's got this huge net worth, but he cannot liquidate it into cash. Cash is king. One of the reasons why it's important to trade is because whatever you have, you can liquidate in cash in a matter of hours, technically, in a matter of hours. So you've got a $20,000, $10,000, $100, $200, whatever it is, you can liquidate it in cash, and that gives you a lot more liquidity. I hope I explained that very well. Of course, this builds into alternative sources of income. This is the time where it's not a if maybe type of thing. It's something you have to do. It just makes absolute sense. This is not a time to question whether or not one should have an alternative source of income. We're in an environment where inflation is rising at astronomical levels. And I tell people that the trend, if you know, as a trader, I understand what what it means to trade with the trend. Now the trend, if you look at the naira dollar as an example, or the naira against any of the currencies, any of the global currencies, you would find that the trend from the time at which Nigeria became a conscious state has always been that the naira continues to get devalued. The reasons, fundamentals, and other kinds of analysis would tell you it's simple. We don't have the fundamentals, and when you look into the future, you would realize that it's only going to continue. So I told people, I mean, do not be surprised if in the next 5 years the naira hits 1,000, and they say, oh, I mean, I was saying to people that in 2014, I remember vividly in 2014, 2015, start of 2015, how we all went crazy when the 2015 when the dollar went past 170 and actually got to 200, around that space. I remember feeling wow, I mean, thinking, but here we are, and the pressure, in spite of everything that's been done, the pressure continues to rise. This is the time things are going to get more expensive. What that means is that what you could buy with your source, with your current income source, you won't be able to buy it. Your money essentially will get devalued. It's a reality. That's what inflation does. So it makes sense to be able to cushion that with an alternative source that helps you and protects you. All right. So another reason why it's important to trade the market in these times is risk is totally in your control. Now, I know that a lot of people who are new do not really understand what this is, but I can tell you, I'll give you an example. If I had a trading capital of, say, $5,000 as an example, or say $1,000 as an example, I get to predetermine what my absolute risk is. That is how much flexibility that exists within trading. So I know a lot of people come with the idea that, oh, well, isn't the financial market supposed to be excessively volatile? Yes, there's volatility in the market, but I'm telling you that in terms of what that volatility becomes on your account, you have the control. So you can predetermine what your absolute risk is. Any trader who doesn't understand how this is, who doesn't practice this, cannot be successful. But I'll get to that very shortly. This is a skill for life. A lot of people, people come into the financial markets to explore freedom from all sorts of core areas. As I mentioned to you, my background was in engineering, is in engineering, and I actually even have a master's degree in engineering. So the point is, people come from, I know people who are doctors, people who are, it really doesn't matter. This comes and essentially adds to whatever it is that you're able to do. It becomes a skill for life that provides you options. All right. And it's also critical for general investing knowledge. Now, as a Forex trader, for instance, the basics and fundamentals of Forex has allowed me to be able to better understand markets that on the face level will appear very, very different from Forex. So I understand better how the stock market works, as an example. I understand what to look out for in terms of fundamentals. I understand what the technicals are. I understand, even without trading some of these assets, some of the alternative assets outside of FX on a daily basis, I understand how they work, because the financial markets contain the principles essentially are very similar across them. So if you decided to be a trader, I can guarantee if you know what you're doing, you will understand how all these other markets work. Some of the books that we read, as an example, for Forex trading, were written by stock traders. Some of the books about technical analysis were written by stock traders. The reason is because they find application even in the Forex market. So if you just wanted to increase and grow your knowledge about investing, this is going to be an amazing. Of course, return potential this is absolutely, especially for Nigeria. I don't even want to sort of overflog this because this is a reality that is all too familiar with everyone. All right, so I now want to actually proceed. Like I mentioned, how this session is going to be is, after the introductions, I'm going to share with you what just a general idea what the financial markets will be, and I'll get into something that's useful for people who are new, and get into something that is useful for people who are not new, who have traded before, maybe were successful, people who are struggling essentially with finding consistency and success, uh, uh, being profitable in financial markets. All right. So in the financial markets, essentially, um, we've got buyers and sellers essentially meeting to trade financial assets. Okay. Now, if you wanted to know what those assets could be, those assets could be stocks. Understand that I'm not talking about the forex markets right now. I'm talking about the financial market. This is like the big umbrella under which all of these other sub markets actually come under. And that's why I say if you understand the forex markets as an example, you'll be able to find that you'll be able to use that knowledge profitably. All right. So the financial market, any place where buyers and sellers meet to trade financial assets, we're looking at stocks, we're looking at precious metals. What are precious metals? Gold, silver. We're looking at forex, which of course, I mean, we call it the forex markets because a good percentage of the instruments are alternative words for products. The instruments that we're going to be trading are actually forex pairs. That's why we call it the forex market. Then we have commodities, and then we have derivatives, on and on like that. So the total umbrella under which all of this works is called the financial market. I guarantee you that if you understand one, you'll be better positioned to understand the other one. Now, so in summary, you are either doing this, you're either the guy who's on the buyer side or the guy who's on the seller side. That's how it works. So if you're playing in financial markets, you're either the buyer or the seller. Okay, so yeah, I just decided to share why start with the forex market, considering the fact that hey, the financial market contains other kinds of markets. In fact, I mean now you've got the options increase. The crypto space, as an example, is burgeoning, is growing at an amazing pace. Why then start with the forex market? Now I'll tell you something. I don't know when it was. It was not so long ago. I mean, I was in and around this space, and I saw a seminar where some guys, were promoting, were sharing about cryptos. So I was just it was just an outdoor place. So I got up and went to say, just kind of went to listen. At the end of that process, I ended up literally educating some of these guys about some of the options and opportunities that exist. Forex, as an example, will teach you about volumes, will teach you about leverage, will teach you about margin trading. Some of these features exist in the crypto space. A lot of the people who share about cryptos do not explore those areas. So what I'm trying to say is it introduces you to financial market trading. It gives you a strong foundation that if you wanted to explore other areas, other parts of the financial markets, you would find yourself properly grounded. It will definitely not be an information that's just useful for forex trading, all right? Especially if you really know what you're doing. Okay, so you learn principles applicable across multiple asset types. Again, risk is totally in your control, totally. Now it's usually difficult to understand this, but I'll share with you how this is possible before the session is over. Because at the end of the day, in the financial market, there are two kinds of risks. Any financial market you're trading, the risk might either be a volume risk or it will be a volatility risk. Now, these are the only two other kinds of risk. I mean, these are essentially the only two forms of risk that every other thing boils down to. You're either taking risk as a result of the volume that you're entering into, or you're taking risk as a result of the volatility of that instrument. Now, there's things you can do for volume risk. You can reduce volume. There's things you can do for volatility risk. You can have a point. You can limit your exposure on the volatility of that asset. But I'll be sharing, by the way, guys, volatility means price change, okay? The speed of price change. You say an asset is more volatile if the price changes fast. A lot of you know that in recent times, everyone is going crazy about Bitcoins. Everyone is going crazy. A Bitcoin rose by almost 30% in a single day or two, thereabout, almost 30%. That's a lot of volatility. And so I'll get into how to manage those risks, but let's walk quickly through this because we got a lot to cover. Again, you can profit in rising and falling prices. Now, trading within the forex market is not restricted to a sort of buy and hold scenario. What I mean by buy and hold is a lot of people who trade stocks would understand this. When you buy when you buy a share in a company or buy shares in a company, essentially the company has to do good for you to make money. If the company doesn't do good, the prices fall, you lose money. Now the point is, if you're trading assets in the forex market, it's not like that. You can profit in rising and falling prices. You just have to be on the right side of your trade. So you're not stuck into one side of the trade. That's a great advantage. I'll share a little bit more about that as we go along the way. It's also critical for general investing knowledge. I fail to see one person who is a good trader who will not by default understand the risk reward principles to the point that he is better trained already to be able to not be a candidate for scams. I believe so. I definitely believe so. Again, cash on demand, cash on demand. Sometimes you need that thing where if you have the skill, you wanted $100, you have some capital. You wanted $200. If you have the some capital, you can use this to get cash on demand. You know, cash on demand means like money when you need it. Money when you need it. So this is one of the reasons why I feel like, you should start with as an example, I'm exploring a lot of and the grand vision for Suavally Markets is that it provides an amazing platform for anybody who wants to learn anything financial markets, the forex market, crypto space, whatever. Anybody who wants to learn anything financial market, that's our bigger vision. But forex is where we have core niche skills, and forex positions you to be able to better explore all of these other areas. All right, so guys, we're going to get quickly into the concept of trading now, and I'm going to give you an analogy of the traditional commodity exchange. So I've been going on and on for a little bit. I need a little bit of feedback. I want to hear what you're thinking. I want to hear if I'm communicating. I feel like this evening is really exciting. I'm feeling very excited, even though I've got like this, I'm all suited up for you guys. But I'm feeling very excited. I want you to know I'm going to Joshua, if you're still here, I'd like you to put up the comments. I'm curious about. Okay, Joshua just stepped away. Okay,
I'm here.
Okay, you're here. So yeah, so I want to know if you are, if everyone is here, if you're following us, just say I'm following. Give me those feedbacks and let's keep going.
Yeah, guys, can.
So you can just put up in the comment
sure.
section. I'm here. I'm following.
Yeah, sure. People are following already.
Okay, getting excited too. All right, wonderful, wonderful. All right, so who else is here? Who else is here? Thank you very much. Appreciate it. Thank you very much. Okay. All right, I just needed to check. All right, wonderful. I just needed to check that we're here together. Okay.
Yeah, we're here.
All right. So 1 second. Right. So let me get back to my presentation. Okay. So this is what a traditional commodity exchange looks like. Okay. This is something we're very familiar with because our markets, our exchanges are usually cash for some kind of commodity. When you go to the market, it's like cash for commodity. So I did this little sort of infographic to help you understand this. So on this side, you've got some cash. On this side, you've got a commodity. And you can think about it like a barrel of oil or something. So I want to give you an analogy of what a commodity exchange is. Once you understand that, it forms the foundation of all kinds of trading. Okay? There's a tendency to think that trading is some esoteric concept. It's not. Okay? Trading, follows the basic principle of trading just as you know it. All right. So let's look at a scenario where we've got a guy here who comes into the market with this. And then we've got another guy here who comes into the market with this. For a trade to happen, okay, we've got to have a buyer and a seller. All right? Now, before a trade will happen, okay, there has to be a sense of price, a pricing regime, okay, that defines the relative value between both of those assets. Okay, so they, and that usually, when you go to the market, as an example, what determines the price, is usually market consensus. Of course, I mean, you have some individual people who sell theirs a slightly higher, but they won't be competitive. You can't want to go to buy something that averages 6,000 naira as an example, and then somebody's going to want to sell it for 100,000. Okay, it's not very likely. Okay, so what actually determines that value exchange is what is the market. So in this example, I'm assuming that the market gives a relative price between these two assets as the drum, okay, as one drum, okay, that is the drum that the seller brings to the market is $70. So $70 of the buyer's cash is going to be able to purchase one drum. Okay, so understand the features of what makes trading. You got a buyer, you got a seller, you got a market that is determining the price. Okay, now before a trade will happen, what are the things that need to be present? Okay, before a trade will happen, what are the things that need to be present? Now let me just do this. Now before a trade will happen, okay, this seller here who's got this cash has to desire this drum of oil. You know why? In the financial market, cash is king. Everything we do is about money. The only reason why it would desire it in the financial market is because this commodity is set to rise. He believes that this commodity is set to rise in value. Before a trade can happen as well, this seller has to desire the buyer's cash at this current price. This is the fundamental principle of trading. Now, if both parties don't desire at the same time, you don't have a trade. So the global financial market is such a complex web of traders connected by an online platform all around the world. So there's a balance in that market. The reason is simple, because we have so many buyers and so many sellers, okay, all connected using technology. So, somebody says, oh, I'm placing a trade. What are you really doing? You're either playing as a buyer or a seller. Okay, there has to be a counterparty to that trade, maybe in some far-flung part of the world. Now, again, looking at what trading is, how does a buyer come to a point where he desires this commodity? What makes him desire? That's what you know as analysis. There has to be a way in which he kind of looks at this pricing system, looks at the fundamentals around it to now desire that asset. Okay, so let us assume that both parties are okay with this exchange. So what's going to happen is you get the buyer extend his dollar, and then you get the seller exchange this at this current price. So now both parties have gotten into a trade. Okay, now do you know what happens? What happens now is that this buyer, for him to be profitable, this crude oil has to rise, okay, in value relative to the dollar. Okay, that is, over time, the crude should be worth, one of these crude should be worth more in dollars. That's the only way these guys go. That is, this asset that he has decided to purchase and hold through time must rise in value compared to what he started out with. That's the principle of trading. Now, the same thing goes for the seller. For the seller to be profitable, you see, this dollar has to rise relative to this crude oil. In other words, this crude oil should actually fall relative to the money. How is that possible, by the way? Let me give you an example. So this buyer here has exchanged this $70. It now gets here. Now, if this price were to, if the price of the drum now, if the value of the drum now became like one drum now getting sort of worth $100, he automatically would have made $30. That's because the drum rose in price. Now, but if the drum fell in price, so one drum now started getting what, $50 as an example, okay, who makes money is the seller, because now he can go back to the market, purchase the drum, and still get $20 profit. I hope you understand that analogy. So essentially, after the trade is done, who makes money is determined by what the future price from that entry point. What the future price from the entry point price now proceeds to. So I'll give you an example. In this example here, price now actually rises. So one drum, price rises, okay? The value of the drum rises. So one drum now gets to be what, $110. Clearly, the buyer makes money. Okay? Now, understanding this principle is very critical because it gets trading, because a lot of people are trading in front of their laptops, or they don't see the counterparty of the trade. So they kind of think that maybe we're pressing things on a computer. No, there's a principle to it, and it's consistent to your principle, to the principle you understand. That principle that you understand when you go buy stuff in the market, it's still consistent to that principle. Okay, so this is an example of commodity exchange. It's the same principle with currencies. Okay, so this buyer makes profit of $40. Now, as you can see, the drum is the asset of value for the buyer, because it is this drum that he holds through time. Okay, he holds through time after entering into the trade. Now, I said that slowly so you understand. He has gotten into the trade. That's what he's holding, expecting it to appreciate. Now, but for the seller, the USD is the asset of value for the seller, because this is what he hopes to appreciate through time. So if you begin to look at it, you begin to understand really what trading is. You got to have the skill to be able to identify assets and really how you do that is called trading strategy. You have to have a proper trading strategy. Okay, if you understand that and you understand how to manage both volatility, both price change risk, which is volatility risk, and volume risk, you really you understand the fundamentals and foundations of trading. Okay, there are a few other features that come into trading that make it somewhat more exciting, but this continues to be the foundations of what trading is. So let's look at a currency exchange now. Okay, under the same principles. Okay, so we're still going to have a buyer and a seller. Okay, so you got the market determining the exchange between both parties. Begin to understand the features now. Every time you're going to have a buyer and a seller, one coming essentially with one kind of asset, the other one coming with the other kind of asset. So basically, this is how it works. So in this example, for instance, you have €1 at this price, meaning the euro-dollar price is this. By the way, guys, a lot of you, even though you don't trade, I'm sure you see on some financial, either on some financial websites or on Bloomberg. If you watch that on CNN, you're going to see prices scroll through on and on like that. Those are market prices. Now, what's actually happening is these prices change as a function of demand and supply, much in the same way as prices change in the typical market. Traders monitor these price changes because it is when the price changes that there's opportunity to profit. Okay, traders want the prices to change, because if prices stayed stagnant, nothing rose against nothing, then there's no opportunity for profit. So we want it to happen. All right. So now as we move on, okay, so we've got the buyer on this side and the seller on this side. For a trade to happen, the seller, okay, has to desire the dollar because of a perception that this dollar is going to rise relatively. And the same thing goes for the buyer. He has to decide. Only when that happens does a trade happen. Now, I'm sure, even though this information is very sort of fundamental and very basic, it gets a whole lot more complex than that, because there are extensive networks within which buyers and sellers connect with each other. Okay, it's a so in fact it's like an hierarchy of connection. You and I are called retail traders. I'm going to get into that later on, but it sort of goes and it becomes a very extensive system. But suffice to say at this point that for a trade to happen, a buyer and a seller have to both agree about the the trade. Now, so what you're going to have is the exchange is done, and at this point, who makes money? Okay, as you can see, the dollars come over here, the euros come over here. At this point, the buyer is anticipating the euro to rise in value, while the seller is anticipating the dollar to rise in value. They are both anticipating something. Okay, now who makes money? Okay, is now a function of what becomes of the market price. Okay, so essentially in the market, you essentially, while you folks say, oh, I'm losing money, there's probably somebody who's making money on the other side. However, the name of the game is to play it in such a way that you have a strategy that is good, that allows you to consistently make money, take good risk to reward opportunities, where over time, whether it's you're looking at a period of a month, you're looking at a period of a couple of months, whatever the case is, you are growing your equity, you're growing the capital that you take to the market. That's the principle. So in this example, price actually rises. So yet again, the euro rises. 1 euro, okay, now gets worth more in dollars. The buyer makes money. Now, should we have had a scenario where the euro actually fell, the seller would have made money. Okay. So I'm going to introduce you to, I'm going to talk briefly about something called volume in this quick example. Okay. But of course, as I mentioned, the euro is the asset of value for the buyer. And of course, the USD is the asset of value for the seller. That's the asset that after he got into that trade, he hopes and anticipates that that asset is going to rise in value relative to the asset I got into. Okay, so in this example, for instance, the buyer makes a profit of what is a fractional amount in dollars, but it's important to state that in the financial market, in actual forex trading is traded. I mean, forex is traded in volumes, so there's no such thing as trading 1 euro for a dollar. Okay, so the minimum volume that can be traded is 1,000, not $1,000. Okay, but 1,000. I mean, you can open a forex account with even as little as $50, $100. And essentially, But I will explain to you how it is later on in subsequent classes. This class is a 3-day class, and before the class is done, you would understand how even though you need a minimum of 1,000 in volume, there's such a thing called margin trading, which is one of the interesting features that would allow you to, with a little capital, be able to access higher volumes. Okay, so back to this example, the buyer makes a profit of 0.11. When you subtract these two, it becomes his profit. Now imagine a scenario where the buyer had bought with the minimum number of units of trading, which is 1,000. Okay, 1,000 units is the minimum number of trading. Okay, the buyer would have made $110 for that price exchange. Okay, and that's clear because if this is for 1 euro, then if you're looking at 1,000 for that same, just multiply this by 1,000. If 1 unit can give you this, then 1,000 units will give you this. It's that simple. So essentially, you begin to understand, even though we've not really treated volume in excess in a big extent, you begin to understand why volume, okay, is one of the features of trading. The lower the volume, the lower the yield, the lower the capital increase for the same price change, the very same price change. So if you have increased volume, you can make more money, but it also increases the counterparty risk, which is why I said that the two risks in trading, the first one is volatility risk as a function of price change, and then the second one is volume risk. So in trading, as an example, as you go along, you begin to understand, and there are demo accounts that you can practice with. you begin to understand how you can manage that volume risk while still using trading strategies to buy and sell those different assets. Okay, so again, now I'm going to talk quickly about lot sizes. Lot sizes. Now, the lot size measures the quantity of trade, big or small. The higher the volume, the greater the potential profit and risk. I did a very small introduction to what a lot size is, okay? But I'm going to expand on it a little bit more here. So generally, the minimum volume that people can trade in the market is what 1,000 units. It doesn't mean, like I said, that you need $1,000. Forex accounts can be opened with $100, even $100. However, you will now have to take advantage of something called leverage. Okay, so you leverage that capital to be able to access higher trading sites. But that's just by the way. All right, so we've got volumes. So this is a volume in the market. When you are going to be entering trades, the market does not recognize the use of volume. Instead, it converts that volume to lot sizes. Okay, and this is based on the historical way in which trading has been done before trading became accessible to retail traders, on the floor traders like yourself and myself. Trading in the past used to require a lot size, one lot of 100,000 of the volume of whatever you're trading. So if you're trading Euro USD as an example, you're going to need 100,000 euros. Okay, if you're trading another currency, you're going to need 100,000 of that currency. However, like I said, again, you don't need that much capital. Something steps it down that can still allow you to access that. So essentially, when you're actually trading, you don't put in the volume like this. What you do is you put in the lot size. So if you wanted to trade 1,000, the lot size that goes with that is 0.01. If you want to trade 10,000, the lot size that goes on and on like that. Now, I'm going to explain this a little bit more as we go along the line. Not at this point because we've not even started sharing about what pips are, but suffice to say at this point that volume is a critical part, because the more volume you attach to a particular trade as you get into that trade, the more the profit potential you have for the same price move. However, it is critical for you to become skilled at proper position sizing. Okay, that's one of the key things. In fact, your position size in terms of the volume size that you are appropriate to trade, okay, has to be as a function of your entire capital. Okay, so somebody who doesn't have a lot of capital should not be attempting certain kinds of volumes that other people use. Okay, so this is just, I'm giving you a general idea of how all of this works. So if I wanted to give you an example, for instance, of how this plays out. So let's say we have this instrument, Euro USD, at this price. Okay, so if you have this gentleman over here enter into this trade with a volume of 1,000, and you have this other gentleman here and enter into the trade with a volume of 100,000, and eventually the price rises, okay, to say this second price. That is, the meaning of this quote is 1 euro is equals to 1.2300 USD. That's what it means. That 1 euro equates 1.2300 USD. Now, if that now increases to 1 euro, now equating a higher value of USD, which is 1.2500 USD, let us see how the difference for the same price change, let us see how that affects the profitability. So the price difference is 0.02 euro. The profit that this gentleman here makes is 20 euros, while the profit that this other person makes is 2,000 euros for the same price change. So you begin to understand how it is that volume is important. Okay, so there are a few other things to share here. Right, so as I mentioned, the key risk of all financial market trading, and this is, once you understand this, you are set to become a trader. You have to understand it, know how to manage it. Once you're good with that, you are set to become a trader. The first risk is the volume risk, and the other risk is the volatility risk. If you can manage these two, you are set to become a trader. And you don't just sort of manage it, out of the blues. You manage it with okay. So we're running out of time right now. I got to be very fast. So I'm going to walk you through a few other things. So like I mentioned, like I promised at the start, I said we'll try to ensure that people who have never done this before are able to get value. But before I go into that, I want to just talk very briefly about the types of traders that exist, okay? And the kind of trader that you are will be a function of what your reality is, okay? So as an example, we have certain people who trade every day. This is what they do every single day. You have them opening up the charts, looking at the charts. A lot of people kind of think that that's how every trader has to be. It's not true. So intraday traders are people who often have a lot more time to engage within the market. So they're typically entering into trades, looking for price changes within the day. Swing traders, however, okay, are people who don't have the time to be able to get into every trade. However, they can check the charts 2-3 times as an example within the week. Okay, so and they'll tend to allow trades to run more. Position traders are the types that could leave trades open, okay, and check them repeatedly, maybe after an entire month, as an example. Could leave trades running for a whole month. So why this is important is to recognize that irrespective of who you are or what your day-to-day sort of realities are, trading, you can still find a style of trading that will suit you and that would also allow you to keep going. Okay, very quickly, for new traders, I'm just gonna one of the key things that you're going to need to do, I want you to take this link down. One of the first things that you're going to need to do is to set up an account. Okay, this account is going to allow you to be able to have a practice account, which is called a demo. It's usually like the first thing you have to do. So you want to go to this link here, set up an account with the broker. Once you're done with the setup process, okay, we'll send an instructional guide to all our community members on how you can begin to set up your screens and whatnot. We will not be able to go through that at this point, but instructions will be sent through the Telegram channel. I want to believe that everybody is on the Telegram channel, through our Telegram channel and also through our mailing list. So everyone should be able to get information on how exactly they can set up their demo accounts, have the trading platform and essentially be set to practice. So if you're a new trader, there's no trading without a trading platform. So you want to use this link, fill up the details and set it up. So you just keep this on the side as we move along. All right. So I decided to write something here called your roadmap to trading success, because if you understand this, it can significantly shorten your curve in terms of understanding what things you need to be doing. Okay, if you want to be a trader. So yeah, you find this interesting. You think that, okay, well, you see yourself doing this. What exactly do you need to do? Number one thing is to prioritize learning and practice. And this cannot be overstated. The skill is a skill that essentially can pay you for life. You cannot unlearn it once you learn it. Again, remember all the reasons why I said it's great to be a trader, have cash on demand, have cash assets, all of those things. You are a step away from having those realities. But every good thing comes with some kind of a sacrifice. So that time to watch our videos or to even this time you're spending here, you got to prioritize learning. The next thing you want to do is to apply a good trading strategy. A trading strategy is what informs how you select what you're buying or selling, how you select which instrument you're using, how you select what volume. So, risk management is in fact, okay, a part somewhat how you appropriate your volumes, it also goes somewhat into determining, okay, whether or not your trading strategy is good. Now, of course, learn to manage volatility and volume risks. Okay, after doing this, get a mentor and or a trading community that can provide you support. Okay, luckily for everyone who's here, we have that, and that's essentially the reason why we're setting up with Suavely Markets, to be able to provide that. And it's an ongoing thing. Okay, when people ask me, David, what's your reality like in terms of like trading? I'll tell you, it's an ongoing thing. I mean, weekends, at the start of a new week, you can set up your look for opportunities. If you're working with a community, as an example, you can use some of the tools that are present within that community to develop yourself better. For instance, like I mentioned at the start, we have a research that's published every week that looks at the opportunities that will be coming out in that new week. Where could the money possibly be in that new week? That's published every week. So having that community, so at some point, as you sort of engage in that community, you'll be able to glean off the knowledge and experience of people within that community, develop yourself better, and essentially you'll be able to do this absolutely by yourself. Okay? So from the very start, I encourage everyone who wants to be a trader to use journals from the start to track your progress, even when you are just on the demo account. Even when you're just on the demo account. So I want to ensure, I want you to make sure that you're tracking your progress. Okay, now I can do this. Okay, when you enter into trades, as an example, because from, I believe, like from the next class, certainly before the end of these 3 days, we would already start seeing, okay, one of the reasons why I set out the last class to be on Monday, as an example, in the evening on Monday, the reason is because the markets are open Mondays through Fridays. I didn't want us to have a full weekend class such that when we wanted to actually now place a trade, the markets are closed. So before the end of this class, we'll be able to get into actual trades. Of course, on a demo, you already have that. That's why it's important that you do that setup. You already have that, and you'll be able to partake, and slowly begin to develop, and then use all of the other tools that we have. All right. So I mentioned to you already, for you to be able to access the markets, you would use a broker. Okay, so brokers provide this technology that essentially, so all of this physical, all of this sort of analogy and explanation that I gave you, you don't see that. What you see is that you've got a platform, you've got a PC, you've got a Mac, you've got a tablet, you've got a phone that shows you all of those assets. You click on a button, you can buy and sell, but you don't see the counterparty of that trade. Well, that's because there's an extensive network that connects that connects different parties from banks. And just to tell you some of the parties that are there, we have banks, you have hedge funds. Those are some of like the bigger players, in the financial markets. Okay, we have even governments. We have corporate institutions. We have these are some of the players, and as we go along, we'll be unveiling some of those players and just to give you a sense of what exactly the industry is. So basically, you go through the broker. It provides you the platform. After that registration, there's going to be a place where you can actually download a trading platform. Okay, we're not going to quite cover that today because we've got we don't have that much time. But through the broker, you can access the financial markets, and the broker provides you absolute free practice accounts that allow you to just practice. Okay, and that's the account that we're going to be using. All right. Okay, so I decided to do a little bit of a closer look of a forex pair as an asset. Okay, so two currencies are involved in every transaction. So quite as we're going to move into what it looks like in actual trading. Okay, I decided to give you that example because I know if you understand the foundations of it, it just clicks and you recognize the fact that this stuff it's not magic. It's not like it's rational. It's not just something that some people do. Okay, as we're going to move from that point, it is important to understand that A price connotation like this, or what you call a forex pair, fully represents the relationship between these two particular assets. Okay, this forex pair is what will now determine the perception of value exchange between the euro and the USD. So, as an example, where if somebody is coming to the market, or somebody is with one particular with who wants to buy the euro as an example and sell the USD, this price notation is what fully expresses the relationship between both of these currencies. So what traders are looking at is a trader who wants to buy this pair as an example. Essentially, what he's really doing, okay, because in the forex market, you don't actually go out and say, "Oh, I'm buying euro and I'm selling USD," or I'm buying. You don't buy one particular currency. Currencies are traded in pairs. So what it means to buy this asset, as an example, at a price means you are essentially positioning that the euro will rise in price relative to the USD. That's the first thing you need to understand. When you look at a price notation that says euro USD equals whatever price it is, if you click on a buy, what you are positioning for, essentially, you are like that buyer whose assets, who has given off the USD for the euro, because he anticipates the euro to rise relative to the USD. So for as long as you are still on this trade and you don't close that trade, for as long as you still are on the buy side of this pair, now I'm not talking about buy side of euro or buy side of USD, you are on the buy of the entire pair. What that means is essentially you are anticipating that the euro rises relative to the USD. Now that's what a buy order means in the forex market. When you say you buy, you essentially are doing two things. You are buying the base currency while selling the quote or counter currency. This is the reality of trading. So when you open a trading platform, you're not going to see, you're not going to say, this is euro, this is USD. You're going to see pairs, and that foundation is very important. Okay, so let's look at some of the major currency pairs that we have. Okay, these are the most traded currency pairs. They're called the majors. Okay, as you go along, I'll share with you some of the interesting features of these currencies that traders understand, and it helps them to profit. So whether you're going to be an intraday trader, or you're a swing trader, or you're a position trader, whatever your reality is, depending on how much time you have to be able to place trades, you find that understanding the behavior of some of these assets, some of these features of these assets will become very useful for you. So we've got the Euro USD. These are some of the common pairs in the world. Of course, they represent the major currencies in the world. You've got the pounds USD, which is fondly called the cable or the sterling. If you read a lot of research reports, you find a lot of the cable or sterling used. The Australian dollar USD, which is also known as the Aussie. You've got the USD CHF, which is known as the Sweezy. You've got the USD CAD, which is known as the Loonie. You've got the USD JPY, which is known as the dollar yen. But the NZD USD. So typically on a trading platform, you're going to find all of these pairs. Again, like I said, you find pairs. If you decided to buy the GBP USD at a certain price, what you're actually doing is you are positioning that the pounds will rise relative to the USD. Now, there's an entire system. Again, like I said, there's something called trading strategy. Okay, it's not so complex, but you have to crystallize and develop that. It forms the full information on how you determine, as an example, whether to buy this or to sell this or to buy this, stuff like that. And on the forex market, on the forex chart, you have several pairs that you find, typically over 50, 60, 70 pairs you'd find, not to mention commodities, not to mention shares, indices, on and on like that are found on the platform. But the principle is very similar. Anytime you see a pair, you're essentially buying the base and selling. But if you click on a sell, what happens? You're actually buying you are buying the counter currency while selling. Now we'll go a little bit more in that. So these examples that I've given have always been for buy. Um, this currencies that are put on the yellow as an example, when you buy, that's what you're anticipating to rise. But the one in black, when you sell, so buy and sell are not just, oh, I'm buying and I'm now selling later. A sell order is an order that would essentially be buying the one in black while selling the one in yellow. So the buy order is buying the currency in yellow while selling the currency in black. So those orders are opposing, okay, because they represent the reality of a trader who is either on the buyer or on the seller side. So this is why we say it is possible for you to profit either in rising or falling prices. It just depends on what you're doing. All right? Yeah. So let's look quickly at the FX market participant. I was already talking about this. Our time is fast spent now, but I'm going to see if we can quickly wrap this up so that you get a full picture of who plays in this space. At the very top level, okay, the guys who play in this space are the major banks, international banks, Bank of America, Morgan Stanley, Barclays Bank, all of these banks. They are the ones responsible for some of the biggest volumes that come into the Forex market. It would interest you to know that the Forex market, every single day, daily traded volume in, well, of course, it's the biggest market in the world. Daily traded volume is in excess of $6 trillion. And many people even say now it's in excess of $7 trillion, and it's just rising. I remember it wasn't so long ago where we would always say it was $4 trillion. Now we're at $6 trillion. So it's rising. More participants are getting in. And at the very top are the major banks because they bring in the major volume. These banks are trading tens and hundreds, possibly billions of dollars. Now, these banks use a particular technology to trade with people, with medium-sized banks. So that technology is called electronic brokerage service, or the Reuters Dealing 3000 spot machine. These are technologies that allow the medium bank and the major banks to connect. So the guys in the lower rung, you have the retail market makers, the retail ECNs, and then hedge funds and corporates. So essentially, the retail market makers and the retail ECNs aggregate trades from the retail trader. So you and I, we are here. Through the instruments of the brokers, which essentially are at this point, we can aggregate our buy and sell orders and pass it on to the medium banks. And of course, through hedge funds and corporates. Hedge funds are companies like Warren Buffett's company, as an example, Berkshire Hathaway, and companies that essentially aggregate a lot of funds and put them together to trade. So you have the retail trader at this point trading. Okay, a lot of retail traders all around the world. You know, their orders are aggregated to the next level, on and on like that. So this is the scope of the guys who partake in this. All right, so I'm very excited that we were able to get to this point. So for existing traders, I'm just going to drop this in order to ensure that you got value, okay, for your time. Okay, I believe that to some extent, if you've never traded Forex before, I want to believe that the mist is clearing and you're getting set to see that there's no black box in this. You can understand it if you're interested in understanding it. Okay, what are the tools to get successful in trading? One of the key tools to get successful in trading is to be a master of your emotions. You have to be a master of your emotion. What does that mean? There are few industries where it feels like endless money is on the other side of you, such as trading. With the click of a button, a trader can essentially seek to get endless money, just a click of a button. However, it is important to understand as a trader that you have to do things right. You cannot allow greed to make you increase volumes irresponsibly. One of the reasons why a lot of people blow out and say, I've seen people say, I mean, we had some people here on the call who say, oh, I lost money. When you lose money beyond a fixed, defined amount that you are okay with, okay, that is improper trading. One of the key things that will make you successful as a trader is to quantify your risk. As an example, pro traders will tell you, if I have a trading account of $1,000 on one particular trade, I'm not going to risk more than $10. It doesn't matter how exciting the trade looks like. That's 1% of the total account equity. How is that account not going to outlast if you're doing the right thing over and over again? Managing emotions. So I'm talking about greed in this point. One of the first emotions you have to manage is greed. A lot of you, when you start trading on the demo account, you get that impression. I got it when I started trading. I would look for the highest volumes because, I mean, you could. Nobody was stopping you. However, I remember, I'll never forget that there was a friend of mine who sort of introduced me at that point to trading. I would always want to go for the highest volumes, because of greed. I mean, when you go for the highest volumes, you watch as the dollars pile up. You just watch it in a very short space of time. It increases significantly the volatility in your account, because that level of volume, that sort of gives that sort of adrenaline rush, and it's exciting. However, I remember him saying to me, David, do you want to learn how to trade, or do you just want to play this like a game? I'll never forget that statement. Are you sure you really want to learn how to trade? And of course, he turned out to be absolutely right. So that's why I usually tell people, even from the point where you're setting up a demo account, you've got to get real with it. You have to have the kind of volumes that you use, okay, the way in which you appropriate volumes. You have to cite the purpose of a demo account, and demo account is useful, super useful. Not only does it allow you to get familiar with the technologies that are involved in trading, it also allows you to be able to simulate your volume control. What kinds of lot sizes are you using? On and on like that. Of course, we're going to share a little bit more about that. Now, of course, another emotion, okay, is fear. Fear. I perhaps should go back a little bit on that. Now, there's some traders who are afraid of the market. They're afraid. To play the trade is difficult for them to even get into a trade. You know why? Because trading is an interesting game, because at the end of the day, you don't have absolute control over the outcomes. However, what you are is a manager of capital. You would understand this a little bit more when you start trading. The fact that you are in a volatile market does not mean that your account should automatically reflect that level of volatility, because again, you can appropriate your volume, you can appropriate the level of, you can determine how much maximum price change you will be able to accommodate on a particular trade. So as an example, let's say you have an asset that changes on an average by 100 pips, what we call 100 pips, which is 100 price changes in a day. You can set your trade in such a way that the maximum amount of change that you're exposed to is 20. So when you manage that volatility risk, you manage the volume risk. When you put those two together, you can now know what your absolute capital risk is, for instance, in terms of a percentage of your account. So that's how it's done. So some people, when they don't understand how to do this, it begins to build fear in them. I see no reason why a trader who understands, okay, how to do what you call position sizing and can limit the exposure on a trade to a predetermined trade would not take opportunities to make money in the market. I don't see any reason why. So fear is one of the reasons why people sort of stay out. And some people have a crazy need to be right. They just want to be right all the time. Trading is not one of those games where you absolutely have to be right all the time. as I'll show you at the very last slide here, being your objective is capital accumulation, not being right. Now, there's a difference between those two. You want to make money, not to be right. Some people, their account size, and I'll show you that a little bit as we go along the line. Now, quantify risk on all trades and keep it minimal relative to the account size. This is largely targeted to existing traders, but it's also useful as you go into a trade. As you a new trader, you want to go into learning how to trade. You want to go into learning how to trade. Quantify any risk not quantified must not be taken. So you're not just somebody who's saying what asset is going to rise or not. You have a capital. You're a risk manager. Which is why I told you that when I met those guys who were doing that seminar on the crypto space, they had absolutely no idea. What a lot of them were just doing was just to buy and hold the crypto. What is your risk? They don't know. What is your exit price? They don't know. They don't know. When your risk is not defined, your risk is eternal. That's what it means. And you cannot be a trader like that in any market. In any market. Because all financial market trading involves risk. Okay? The likes of Warren Buffett that we talk about are celebrated traders. These names that we're excited about, they understand this. They fit it into their trading. They know that they take good opportunities, but they also quantify and manage risk. Okay, so this is important. Stay consistent. Now, when you talk about trading strategies, there's different kinds of trading strategies. Now, as I explained to you, there are different kinds of traders. Because there are different kinds of traders, you likely would have different kinds of trading strategies. Okay, so you have the intraday trader who's more in front of his system. You have the trader who has a job, who has a life that's really different from trading, but who understands that diversification is something that he should have. So because of that, he looks for a way to ensure that he still partakes within his own spare time. Doesn't affect his job, doesn't affect other things. Maybe he does his analysis on Saturday and Sunday, and that's what he does for the week. With his phone, he's just probably checking what opportunities are. Before getting into a trade, he has quantified risk and has taken only the best opportunities that are available. Now, because of the existence of like different strategies, some people jump from strategy to strategy to strategy. So the moment somebody says something exciting about, I think that this strategy might be interesting and exciting, you're jumping on it. Existing traders, if you've traded and you've not used that strategy for 30 trades repeatedly, you have no business changing that strategy. You have to gather enough data to tell you about the performance of that strategy before you begin to change it. There are a lot of strategies people use and dump. Strategies that would have won them consistent profitability in the market. They use and dump those strategies after just a few trades. You see, trading, the way trading works is there will be those times where your trade outcome is not favorable. It does not mean that the trading strategy is bad. Every trend must end in some point. Now, what qualifies a trader is the ability to keep risk, minimal on those trades that are bad. Your outcome, your result now becomes the cumulative of the totality of the trades that you've placed. But you got to stay consistent. Don't change strategies, because you're never going to be able to optimize any one strategy. Okay, along the line, I'm going to share more about how to optimize a strategy. Have a trade plan and trade it with discipline. Okay, trading is deceptively easy. You can just log onto your platform and just place a buy or sell. Nobody owes you. You're not accountable to anybody. So in discipline, in terms of not following a clear-cut plan, what do I mean by a plan? Why am I entering this trade? You got to be very clear. Where is the opportunity? What is my exit plan on this trade? It's like any business person. Okay, I've been privileged to to engage with some of like the leading brokers within the region who wanted to come to the region, to Nigeria and all of this. They always ask, what is our exit strategy if we have a problem with regulators here, if we have a problem with the banking system in Nigeria, if we have a problem with the government of Nigeria, maybe a military takes over, whatever, what is our exit strategy? These are questions that you as a trader, you need to answer. You need to be able to answer that question. What's my exit strategy? So you need to have that plan. You need to trade that plan. All right? We're pressed for time now. Use a trading journal. Okay? Use a trading journal. Get skilled at strategy, test, and optimization. So it's not enough for you to just go on the internet and just look for a strategy and then begin to trade it blindly. You have to understand how to use both historical data, and there's tons of historical data. Look at, if you were buying and selling assets with this particular system, what will be my win ratio? What is my risk to reward? Okay, if I were trading with this XYZ time frames, forgive me some of the people who don't understand a few of these things. You get to understand that that's what we're getting into. But if you're an existing trader, you've got to get skilled at strategy, test, and optimization. Once you're good with those things, you can better understand the performance of any strategy. And now that becomes, a skill that you can use to test several strategies as you go along the line. So you build a trading habit consistent to your reality. Do not be a banker hoping to trade intraday. It's not going to work for you. It's not going to work. Does it mean that the people who trade every day in front of their screens make more money than the people who don't? No. So usually what happens is people who get into a lot of trades within like a day period, because price requires time to move. It is very unlikely that the move of price in one day will be as significant as what it will move in a week or in 2 weeks. So I'll give you an example. Somebody who enters into a trade now and gets maybe the intraday move of price within the day move of price for like maybe is limited compared to somebody who allowed the trades run. Now, does it mean that people who allow the trades run are necessarily more profitable? Not necessarily either. The point is, whatever your trading habit is, let it be consistent to your reality. What is your reality? What is your day-to-day like? What time do you get up? And it is to be consistent. Trading is flexible because markets are open 24/7 through Mondays through Fridays. And we even have synthetic indices that you can trade over the weekends right now. What this means is that you can actually build a trading strategy that suits you. And once you know that, you're good. You can have capital within your trading account that you've not placed a trade on for 2 weeks, 3 weeks. Because the trade setups are not ready for you. While you can take the opportunity after the 3rd week, it's still part of cash diversification. All right, so I'll give you a very simple idea. This is for trade account planning. Okay, at the time of starting up a trade, okay, listen, when you're actually going to be at the point where you are managing your account and all of that, there are a few things you begin to look at. You begin to look at what's my maximum risk per trade. Okay, as a function of a percentage of the whole account. If I now had several trades running, what would be my maximum risk across all? This now benchmarks and limits the number of new trades that you can get into in order not to affect the overall volatility. Now, this can be set lower, but should not be higher than this. This can be set lower, but should not be higher than this. So these are examples. All of this should not be higher than this, except you are seeking to trade high volumes in order to be able to get significantly increased yield. But if you're a typical trader who's looking at building equity. I've seen people say, "Oh, I lost my entire account." You're not supposed to be able to lose your entire account. It's not supposed to be possible. It is not supposed to be possible. If you manage your risk trade on trade basis, you can never, repeat the word, never lose an account. Okay? Now, so another thing you begin to look at is, as you begin to study the trade, as you begin to gather more data, as I said, you need a minimum of 30 trades consecutively to be able to estimate, to be a reasonable enough sample size. I would even say 50, but an absolute minimum of 30 trades, you need to use that rule to be able to estimate. And all of those trades must be recorded in terms of what their outcomes are. So you can have what you call the win per trade. Okay, you target, if as an example, your average win per trade using a particular strategy is 3%, you can now have a monthly targeted ROI. You begin to have an idea of trade frequency. This, for instance, gives a trade frequency of 10 trades. As an example, clearly this is not an intraday trader. Got to be a swing trader. If you're looking at 10 trades in the entire month, with a success rate of just 60%. A lot of people think that you got to have like 90% accuracy in order for you to be a profitable trader. The answer is that's not necessary. You need to balance the risk reward game, and you need to win that game over a range of a time. As a portfolio manager, when we create portfolios, as an example, and I advise a lot of people, when myself and my team, we do this, what goes into the creation of any portfolio is the spread total, the cumulative outcome across a number of trades based on the trading strategies and the risk profile on those accounts. So I hope that this is useful. What should a trade plan contain? This is the next thing I mentioned about this. So a trade plan is a detailed statement of how decisions about trade entry, exit, risk, and account management will be made on a trading account. So before you start out, you kind of have a general account plan. Oh, I'm going to be conservative. What that means is that your position size will even be lower. Okay, so the conservative or aggressive or all of that now will go into what kinds of volumes you trade. Very critical. Then this swing begins to talk about your tenure of trades. The trend, as an example, begins to talk about, are you trading trends? Of course, it's always better to trade trends, but this begins to say, oh, okay, I trade the market whenever it's trending. Okay, then this, as an example, say, oh, I have moderate frequency trading because, again, of my reality. So when you're having a plan, it's like everything that needs to work successfully, you've got to have a plan. So the next thing is, what's your trading routine? Trading involves you having a certain kind of consistency. Just the same way you wake up in the morning and you have to go to work. I have a routine that I follow on a day-to-day basis. My team, on a day-to-day basis, because routine is the key to success. And I don't believe it's just trading. What you do on a daily basis, how you master your routine on a day-to-day basis, sets you up for success or otherwise. So you got to have the time for analysis, entry. When do you analyze? Like I mentioned, Saturday and Sundays, if you're looking at the new week for currency trading, you're looking at getting your analysis. I believe that anybody who's trading, whether you're intraday swing, whatever, I think that Saturday or Sunday is a great time for you to look and do what we call weekly market analysis, which is what I publish. Not my hope that you just consume that. It is my hope that you have the capacity to do this for yourself, because maybe I just might not be touching on some of the assets that you have an interest in terms of an analysis of it. So again, you look at time frames, average number of trades, you look at trading strategies, what are your specific entry and exit rules, what instruments are you trading? Then critically, you look at the risk management, the risk per trade, the stop loss plan. This limits volatility. The take profit plan, how much volatility do you want to be there before you take your profit and go home? Then you have the minimum risk to reward. So yeah, so your trade journal is important because it inherently builds your discipline. It provides critical data that can be used to optimize your trade. It amazes me when you have traders who don't have a journal. They cannot tell you, they cannot even learn from their previous outcomes. Okay, you cannot improve what you don't measure. So the trade journal helps you in providing data that can allow you to optimize. Sometimes you begin to find out, maybe when I trade on Fridays, as an example, is not helpful. That's what the data does for you. On and on like that. Then it helps you stick with your trade plan. When you know you have to record your trades, it likely would help you instill that discipline required. It gives you a clear view of your exposure per time. Okay, that is to say, on every time you use your journal, ideally you should have an idea of what your exposure, what this trade or that trade, those two trades that you are running or three trades you're running, what exposure that gives the bigger account. So on a trade by trade, it helps you in managing your risk. All right. So it provides a point of reference for displaying and authenticating trading skills to third parties. All right. So very quickly again, this is what your trade record should look like. Okay. Now, as an example, let's say you have an asset GP Euro USD. You open the trade on this day. You have a particular strategy for which you use commissions, all of that. Your volume, which is your lot size. Your trade results, which is the outcome of the trade, the day in which you close. So you should have a journal that has something like this on a trade by trade basis. You cannot be hoping to be a successful trader in the absence of this. Then you now begin to have the totality of this trade performance now begins to contribute to your capital. That is the how your trade on trade results contribute to your capital. So as an example, let's say you had $5,000. Okay, you now have an account profit loss of $500. Current overall exposure. What this means is that the trades that are running on the account, to what degree of exposure do they put the capital? You have that and you accepted that. So all of these things must be things that as a trader you have to measure. Okay, so this is where I'm going to end this class. It's 9 o'clock already. So I'm going to end this class. One of the big reasons why people don't get successful is because they don't have an idea of the big picture. So I'm going to give you a scenario of two traders here. Two traders. Okay, so you have this one trader who essentially wins 1, 2, 3, 4, 5, 6, 7, 8 trades successfully. So he's winning those trades, he's winning those trades, he's winning those trades. And this is why a lot of people lose money. Then he takes a loss, a huge loss, that essentially wipes out the entirety of his wins. First of all, one key thing to recognize about this loss is that you can predetermine what exposure you have per trade. So when this trader is taking this loss, something must have been wrong with his risk management. Okay, look at the next trader. He takes a loss, he takes another loss, takes another loss, and he takes a win of $500. He takes a loss, takes a loss, takes another one. And let's look at what the overall account performance is like. So you have a trader who has a lot of wins, loses ones, but is still, after 9 trades, is negative of $200 on that trading account. You have another trader who only won twice. So let us say this is a particular asset he was trading. Let's say this is gold. He traded gold, he took a loss. He traded silver, he took a loss. Traded crude, took a loss. He then traded maybe a share, as an example, and took a win. He traded another share, maybe took a loss, on and on like that. The truth of the matter is, as a portfolio manager, I can tell you as an example that The results are all that counts. I don't think that any investor, half the time, investors are not, they don't really care about the individual trade on trade. What investors want to know is what the ultimate result is. What you as a trader should want to know from your accounts is whether you're cumulatively growing. If you fail at constantly being skilled, constantly with discipline, managing your risk, this is likely going to be your outcome. So, it marvels. A lot of new traders will wonder, why then do people say they lose money? Because this looks like you actually have a lot of control. Yeah, you have a lot of control. But haven't you heard that knowing what to do and doing it are two different things? So I've seen a lot of traders who know that these futures exist, but don't have the discipline, the 1 minute, the 2 minutes to put in that record in there, the 1 minute, the 2 minutes to trade, to quantify that risk, to put in that stop loss in there, on and on like that. So it is one of the reasons why it's exciting when you get proper mentorship as you go along the way, is that it positions you to be able to get the right start on the journey that you want to do. So yes, understand that you will always hear people who say, "Oh, they lost money." You would always hear that. You would always hear that. But as we delve in, we begin to understand that there are tools to ensure that does not become your reality over time. I'm not saying one individual trade. As an example, if you look at the win ratio here, it's much less than 50%. This is probably going to be 2 out of 7, maybe something in region of about maybe 30 thereabout percent. So a trade ratio of 30% here still resulted in a cumulatively profitable account. And you know what the trick of this is what you call risk to reward. So this trader, as an example, was cutting losses early, ensuring he only took trades that have the capacity to win big. Okay, and so it's if you get on a journey and you understand this reality, I believe that essentially you'll be getting started, you'll be getting set for success in the game of trading. Are we still here? If you know you're here, I'd like you to just comment. Is Joshua in here?
Yeah. So if you're following, please just let us know you're following. We know we've taken a lot of your time tonight, but this is just the start. So you know what's coming tomorrow, next tomorrow, man, it's fire. So you have to be willing to give this time, as we are also giving you this time for learning and all that. So there's a lot to cover. I won't lie. But not yet, like I said, we didn't come here to just give you marketing bluff. We come here to train you. Yeah, we're here to train you, not to just throw out a lot of marketing trash. We're here to actually give you live content. So you are seeing this is just session 1. And like, man, most people that call themselves pro traders, really, they don't know what they are. You all are just learned for free right now on this first session. So you better take this 3 days very serious. Like I said, this might be what we push some of you into an awesome career. This is what I'm telling you. This might be what might put some of you into an awesome career in this business. Some of you might end up being portfolio managers tomorrow, maybe taking care of hedge funds and all that. Pretty much. So tomorrow is going to be another massive time again. I guess if you, I know you guys are wise. You probably have been taking a lot of notes. And I can also see on the comment section, some people were asking if there's going to be a recorded version. If you want the recorded version, we have a plan coming up. There's the recorded version is not for free. Yes, because we took time out to come here live, so we expected you guys to be here live as well. So, of course, we're going to have a token for the recorded version. But although for attending lesson one or session one, which is this session, you get the recorded version for free. But for the other ones, you have to be here live. For lesson two and lesson three, you have to be here live. If not, you won't get them except you are paying for them. Right? So this is it. We are teaching it
All
for
right, guys.
free. But you have to be here live. That's it.
All right, guys. So I really do hope that you got value. Okay, if you know that you got value, I'd like to see you type value. If you know that you got value
Yeah,
from this
put
session,
value fire, value fire. I want to see if
I want to see you type value. I want to see you type value. I want us to know that what we're contributing is actually something of value to you. As we get started to to do more tomorrow and on Monday, which is actually going to be the start of the trading week. Okay, wonderful, wonderful, Windal. Thank you very much. And that's Windal, by the way, who has traded binaries, and you've traded forex as well. Wonderful, wonderful gift, wonderful value. Okay, so wonderful, wonderful, wonderful. Mr. Michael, excited? Wonderful, wonderful, wonderful. So guys, listen, the goal is not just to do this, is to do this profitably. Understand, just because some people are not successful doesn't mean that that has to be your reality. I have never functioned that way. I would never function that way. Now, so I want you to get ready. Okay. Tomorrow, we're going to start to explore what a trading platform looks like. As Joshua mentioned, we understand when we started out this, a lot of people were saying, hey, we don't know if we're going to be able to learn everything in trading. Learning trading is a continuous process, but we believe that this foundation will get you started. Automatically, you would know how you should align yourself during your quest to understand how to trade. Okay, so automatically, I want to believe that even from this session, you're already positioned to understand, look, what makes sense and what doesn't. Okay, as we begin to proceed along the way. I'm so excited. I'm always very passionate about showing about the market because I personally, I'm a true example of all of the potential that that trading can have. So let's do this again tomorrow. I'd like to thank you so much, guys. Make sure that before you come here tomorrow, you already have the setup done. Register. I'm gonna again. We'll send instructions on how you can set up the demo up on. Thank you very much. Thank you very much. I appreciate it. Thank you very much. Thank you very much. Thank you so much, guys. I really appreciate it.
Yeah,
So
thank you. Also, guys, please, before you go, try to subscribe on our YouTube channel. Just click on this red button and click on the bell icon. We're soon going to start pushing out a lot of great value on this channel. So you want to be the first to see them. You want to be the first to see them. So do well to subscribe. Thank you very much.
all right, guys. So that's a good night from me. And I'll see you guys tomorrow.
Yeah.